So tomorrow is the CPI data, and it's going to be a highly volatile day, followed by Wednesday the FOMC and Federal Reserve funds rate. So we're going to have a lot of fireworks into the year, and I think tomorrow's price action will set the tone for the remainder of the year. So um, we tomorrow is CPI data. We are expecting zero point 0.3 core CPI or 7.7 yearly inflation. So the core CPI is the one I'm going to be looking at, and uh, there's three scenarios. Obviously, if we beat CPI higher, so the CPI comes in hot, I think we're going to sell off. If it comes in line, we can do both. I'm not honestly sure. The two easy scenarios are if the CPI comes in lower than expected, that means inflation narrative that inflation has peaked and is subsiding rather fast, is has traction, and that means that the Fed has to be less aggressive over time, so the markets will rally. If the opposite happens with the high CPI print, that deflation is still here to stay, then the this whole narrative of we've just approached the heavy resistance and now selling off will start gaining speed as well to the downside. Probably will take out these lows sometime next year. So the average volatility of the last six releases is 3%. 3%, if we close somewhere here today, takes us to these highs here. 3% to the bottom takes us to this support right here at the top of this white candle, right? Bearish candle. However, last CPI was 5% day. 5% day will take us above these highs basically. So, and because we were for the last 4 days we've been just waiting for this data to happen, and for the last month we've essentially probed the highs, probed the lows, but we're in between the support right here and resistance. So the breakout is going to happen, and it's going to be a violent breakout. I highly suspect we're going to have a 5% day tomorrow. So 5% day tomorrow puts us above these highs here. Basically, we can grab liquidity above, and if we close above, it's Christmas rally. If we the CPI, and I actually probably give preference towards that CPI is going to come in line or soft. If the CPI comes in hot, the inflation is here to stay, and Fed has to stay hawkish. We're going to get a 5% day, and this puts us basically at the lows here, closing this November CPI rally pretty much. Okay, so it's going to be quite interesting, and similar reactions on Nasdaq and everything else. But you can gauge whatever instrument you're trading off of this. The inline CPI, I will not trade that until I see some follow throughs with the action, because on one hand, we've anticipated softer CPI. On the other hand, and we sold off a little bit prior to it, so the inline might be priced in, and we can actually rally. That's another scenario. But the easiest two are, like I said, are above or below. Those are pretty clear directions in the market whenever they hit. Also, market will have an initial reaction, a little bit of a pullback, and that you should be using that pullback to enter in, whether it's to the top side or the bottom. That's how you should trade. As always, we're going to be trading this live on our Discord. You're more than welcome to stop by tomorrow morning, and all our traders share their screens, so you see how we take trades live and the reasoning behind why we take those trades. All right, hope it helps. Enjoy.